Today, shares of Robinhood reversed course after surging to a new all-time high as the retail trading app's new crypto offerings seemed to impress Wall Street. And Circle's Dante Disparte discusses how the stablecoin issuer is moving forward on its mission to bring the tokens into the TradFi world. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Crypto prices in the red as we kick off the month and the second half of the year. As of noon Eastern, Bitcoin dipped to the $105,000 level. Ether fell 2% but still traded above $2,400, and Solana's Sol token dropped nearly 7%. Now, Bitcoin's price has been stuck in the same range since May 9th, despite huge institutional adoption by ETFs and new Bitcoin treasury companies. In Q2, public companies outpaced ETFs in Bitcoin buying for the third quarter in a row. Taking a look at crypto-related stocks, shares of stablecoin issuer Circle climbing 0.5% as of around noon after the company applied for a national bank charter. We'll have more on that development in just a bit. And taking a look at Robinhood, shares falling today after surging to a new all-time high following yesterday's announcement that the firm was unveiling a suite of new products. Those include plans to expand access to more than 400 million people across 30 countries in Europe. The retail trading platform also announced the launch of tokenized U.S. stock trading for EU users. Crypto World's Mackenzie Sagalos was in France for the company's announcement and breaks down the details from Europe.
I'm here in Cannes, where Robinhood just made what may be its most ambitious crypto push yet. For the first time, it's offering tokenized shares of OpenAI and SpaceX, two of the most in-demand private companies in the world, to users across Europe. It is a landmark move because neither company is publicly listed, and access to their equity has typically been limited to insiders and ultra-wealthy investors. Now, this rollout is part of a broader expansion here in Europe. Robinhood is extending access to over 200 tokenized U.S. stocks and ETFs with 24/5 trading and dividend support.
This presentation and these products serve dual purpose. The first purpose is obviously to deliver great products to users. But I think the second purpose is to just illustrate, to demonstrate very concretely how great it could be if crypto technology and traditional financial services could fully merge. And I think up until now, the crypto industry has been discussing this on a theoretical level. Like, it would be great to tokenize this. In the future, everything's going to be on chain. But we thought we would just deliver, we don't want to do much talking. We want to just put product in customers' hands. And then I think the rest should follow.
Now, back in the US, the company just launched crypto staking, a feature that had been blocked by the SEC, giving American users a new way to earn yield directly in the app. It's a clear attempt to leapfrog the traditional brokerage stack, especially in markets where crypto is live, but stock trading is not. And behind it all, Robinhood has quietly started building its own blockchain. This is the company's first real swing at creating the financial rails themselves and not just listing assets, and that is a huge shift. This infrastructure piece is key. Now, to start, these tokenized stocks and ETFs will trade 24/5, but Robinhood plans to go 24/7 when it launches its own blockchain later this year. And the company says that it will expand from 200 stock tokens to thousands by year end.
You have access to 200 stocks and ETF, and those stock tokens, you can actually, buy them and sell them, no fee, no margin. The only thing that the European customer have to pay is a low 10 basis point FX fee to convert the euro to USD. But in the future, we think that we can expand this to thousands of tokens that will represent different variation of financial instruments, from US stocks, different market stocks, private equity is something that we're really excited about. And, today we just show a glimpse of what we are thinking of doing for just SpaceX and OpenAI. But in the future, we think we can expand this to way more products.
Kraken and Coinbase are also moving into tokenized equities, highlighting a race to own the crossover between stocks and crypto. Robinhood was already on strong footing heading into this. Q1 revenue jumped 50%, net income more than doubled, and crypto trading revenue alone soared 100% year over year. The stock just narrowly missed S&P 500 inclusion, but the fact it was even in the running shows how seriously Wall Street is taking this turnaround.
All right, back to Circle for our main story. The issuer of the USDC stablecoin submitted a bank charter application to the Office of the Comptroller of the Currency. The firm hopes to establish a national trust bank, which will be named First National Digital Currency Bank. Under the charter, Circle will also be able to offer custody services in the future to institutional clients for assets, which could include representations of stocks and bonds on a blockchain. Right now, Anchorage Digital is the only other crypto firm to obtain such a license. Crypto World's Tenev spoke with Dante Disparte, Circle's Chief Strategy Officer, about the development and what happens next.
Dante, it's great to see you. Thank you so much for joining us again on Crypto World. What an exciting month it's been. I did not get to see you the day of your IPO, but congratulations. And so soon after this news that you guys are applying for a bank charter. Tell me a little bit about it and why now.
Well, yeah, thank you. It's great to be back on with you. Yes, the most recent news, of course, is that yesterday we announced that Circle has pursued a national trust charter with the OCC. This, in many ways, not unlike the IPO that you had commented on a moment ago, is the consummation of a very long-standing company objective to race to the top and to continue up-leveling the activity of payment stablecoins here in the United States. Of course, as you know, the OCC charter, it's also expected to be a future requirement of U.S. payment stablecoin legislation, the Genius Act, which would create for the first time ever a federal framework for this activity in the U.S., but also do so in a manner that allows for state-based competition and more optionality in the U.S. payment system.
Okay, so I heard meeting requirements for some of the language in the Genius Act, and then go a little bit further to the extent that you're able on the second part, which is, for me around what potentially would this charter, beyond the compliance aspect, enable Circle to do that it doesn't do already or that it's unable to do already?
Yeah, so as you know very well, the United States in some ways is an outlier country right now in that of the advanced economies, we don't yet have a full framework for digital assets and stablecoin activity. The Genius Act would remedy that. And so what the trust charter would do is effectively not only comply with the expected obligations of the Genius Act, but it would ensure that as the growth of payment stablecoins anchored to the US dollar grows overseas counterparts and regulators could look to the US and could look to the OCC or future federal regulators for a regulatory equivalence, if you will. One of the ironies, of course, is that the United States has what I like to call fintech federalism. So we build payments and banking activities at the state level, but no state banking or payment supervisor represents the whole country overseas at important groups like the Bank for International Settlements, amongst many other bodies. And so it's very important that the United States can carry out that America First standard, if you will, while not being America alone when we promote these innovations around the world.
For our audience that isn't deep in the banking industry or the regulatory space of crypto, can you talk a little bit about what Circle could do versus other banks? It's a bank charter. The OCC would be the regulator. There's so much talk about now that everyone is kind of caught on, the competition and the friction that stablecoins present to legacy companies on both the bank and the fintech side. So how would you guys having a bank charter make you different from a normal bank that most Americans think of on a daily basis?
Totally. That's a very good question. So for one, the trust charter application that we're pursuing is really to capture the stablecoin reserve management and issuance and redemption activity. That is very distinct from what a bank does classically. Ironically, even in the Genius Act, if a bank wanted to issue a stablecoin under that bill, a bank would have to do so from a balance sheet that looks more like Circle's and less like the bank. In part because the bank's more important economic activity is lending and credit creation. And so the banks take deposits and then they take those deposits and then turn them into mortgages and all of these other really important functions in the economy. Whereas a stablecoin issuer, and Circle especially, wouldn't do that at all under this construct. And so it's really about fully reserved payment stablecoins, which are about better, faster, cheaper movement of money in the 21st century. in cooperation with the banks as opposed to competition with the banks. And so we think of this as a really important step forward in protecting this activity in the U.S.
I want to shift over to the Genius Act. It's been a really exciting few weeks for everybody in the industry. I believe this was the focus of the discussion we had last time we had you on, or on with me in any case. And what is that outlook looking like to you right now? It's all looked and sounded very positive, but I'm wondering in terms of the overall picture of crypto and stablecoin legislation specifically, where are we with the Genius Act, and at what point do we are you still considering the competing act that was introduced by the House?
Totally. It's a great question. So, this is where the quote from Winston Churchill actually comes to mind, which is that America will do the right thing when we've exhausted all other alternatives. And undoubtedly, the passage of the Genius Act in the Senate is an example of that. It's a bipartisan bill that passed the Senate. 18 Democrats voted in favor of the Genius Act alongside their Republican counterparts. And now it's over to the House to weigh in. There, too, we believe it will enjoy bipartisan support. So much of the U.S. stablecoin legislative agenda was actually born in the House. All of those fateful years ago, I was one of the witnesses in the hot seat during the Libra hearings in which the stablecoin debate took center stage. And so 7 years later, we have the opportunity to pass this bill as is, as the president has called for, as the Treasury Secretary Scott Bessent has called for, and I think, frankly, as banks, Visa, MasterCard, and many other companies are calling for as well, because it would be in the national interest, not in the narrow interest of companies to do that on a standalone basis. We think other crypto legislative proposals are important, like the Clarity Act that recently came out of the House. But to address crypto market structure after stablecoin legislation makes the most legislative sense. And we have an opportunity to get this done before the summer recess.
To get both done before the summer recess?
No, I think stablecoins alone is the current physics, candidly, just the legislative physics and the current evolution and maturity of the stablecoin legislative debate. Is a little further along than compared to market structure, which again still needs a companion piece of legislation on the Senate side. And so what you see from the Senate on market structure are overtures to take on board legislation that may have come from the House in the Clarity Act is one example, but it needs a piece of companion legislation and a companion pathway on the Senate side to advance market structure as well.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.